Growth in emerging Asia has shown resilience in the face of global uncertainty. The economies of the ASEAN region have stood up well to the challenges presented by the COVID-19 pandemic, Russia's war of aggression against Ukraine, and a global economic slowdown. The strong economic rebound of the region in the first quarter of 2023 has been headed by the Philippines, expanding by 6.4%. The Philippines and Ireland were the fastest-growing economies in the world in the last quarter, at least among the 29 economies. Next was Malaysia with 5.6% economic expansion. The country's growth in the first quarter of 2023 was supported by a further expansion of household spending, continued investment activity, improving the labor market, and higher tourism activities. While Southeast Asia's biggest economy grew by 5.03%. Indonesia's economic growth held steady in the first quarter, as improving consumption and government spending offset a slowdown in exports and investment. According to capital economics analyst, Indonesia's economy is set to struggle over the coming quarters, underlining weakening exports and the impact of Bank Indonesia's tightening on demand. Due to softening global demand, Vietnam's economic growth slowed to 3.32% in the first quarter, as exports fell sharply and a general slowdown in Vietnam's manufacturing sector. Vietnam is among the world's most open economies, and weak external demand is taking a toll on the economy. Adding that an over-leveraged property sector has been hit hard by tightening lending conditions. The Thai economy grew 2.7% in the first quarter of 2023 from a year earlier, supported by a strong recovery in tourism and rising consumption. But the gloomy global economic outlook still weighed on the nation. Thailand's tourism industry, which accounts for around 18% of GDP, started to recover in the second half of 2022 when Bangkok eased all entry rules to welcome foreign tourists. However, the sluggish global economic outlook eroded demand and slashed exports. Thailand's exports contracted 4.5% in the January to March quarter, worth $70.3 billion. Due mainly to the poor economic outlook and cutting purchasing power of major trade partners. Meanwhile, Singapore had almost flat growth at 0.1% on year in the first quarter on further contraction of the manufacturing sector, with growth projected to moderate significantly this year in line with the global downturn. The first quarter's actual economic performance of the Southeast Asia nations was a validation of the International Monetary Fund forecast for 2023. Based on IMF World Economic Outlook database, the Philippines will be the growth leader among the emerging economies in Asia and the Pacific, beating India and China, which is expected to expand by 6%, compared to 5.9% and 5.2% to the later. Meanwhile, among the other major economies in Southeast Asia, Vietnam is expected to grow by 5.8%, Indonesia by 5%, Malaysia by 4.5%, Thailand by 3.4%, and Singapore by 1.5%. Emerging Asia's recovery from the COVID-19 pandemic was supported by surging exports, particularly in consumer electronics, due to higher demand for stay-at-home goods. However, the war in Ukraine led to higher food and energy prices, causing persistent inflationary pressure. The slowing global economic growth is expected to weaken external demand in 2023. This situation affects the current economic trends of Vietnam, Malaysia, and Thailand, whose economies rely heavily on exports, and weak external demand is taking a toll on their economy. Nevertheless, continued pent-up regional demand for tourism is expected to partially offset weak exports of goods. The removal of China's zero-COVID policy should boost tourist arrivals in the region, benefiting economies that rely on international tourism revenues. Strong tourism performance and robust domestic demand are boosting Southeast Asian economies like Indonesia, the Philippines, and Vietnam. With the subregion projected to grow by 4.7% this year and 5.0% in 2024. Consumer price inflation in emerging Asia remains low relative to the rest of the world, mainly due to the broad implementation of policy measures such as price controls and tax cuts, but also because of relatively more contained currency depreciation. In most Southeast Asian economies, the annual growth of both overall consumer prices and core inflation was lower than the global average. While the contributory factors to the initial inflationary pressure of this current episode are external to Southeast Asian economies, the spike in the price of imported goods has gradually spread to the cost of other goods and services, broadening the scope of inflationary pressures over the economy. Core inflation, which excludes the effects of highly volatile food and energy prices, has started to soar as the uptrend in these categories passes through to other sectors. Emerging Asian economies still face risks that could negatively affect their growth and stability, such as inflation, the global economic slowdown, and supply chain disruptions. Policymakers must address these challenges to promote sustainable and inclusive economic growth in the region. The average GDP growth rate for emerging Asian countries is expected to increase to 5.3% in 2023 and 5.4% in 2024. ASEAN's average real GDP growth is forecast to reach 4.6% in 2023 and 4.8% in 2024, weaker than in 2022, but showing resilience, based on the projection framework of the OECD Development Center. Malaysia, real GDP grew by 8.7% in 2022, led by domestic consumption and services, but net exports made a negative contribution to growth. In 2023, economic growth is expected to moderate to 4.0% due to the global economic slowdown and tighter monetary policy. Malaysia's trade surplus is expected to increase in 2023, though the services account will be weak. Vietnam's economy grew by 8.0% in 2022, surpassing global growth rates, and is expected to continue its strong performance at 6.4% in 2023, boosted by foreign investment in manufacturing, especially in electronics, machinery, and footwear. However, these sectors have shown slower growth in the first quarter of 2023. The Philippines' real GDP grew by 7.6% in 2022, driven by household spending, despite inflationary pressures and elevated interest rates. Exports may slow in 2023 due to the global economic slowdown, and tighter monetary conditions to cope with high inflationary pressures may pose a challenge to private consumption and investment growth. Indonesia's real GDP grew by 5.3% in 2022, boosted by strong domestic consumption, investment, and exports. Indonesia's investment will rebound thanks to recent legislation to stimulate it, and construction and mining leading the way. In Thailand, real GDP grew by 2.6% in 2022, supported by private consumption and net exports. In 2023, growth is expected to accelerate to 3.8% due to a further rebound of private consumption and increased tourism, despite the global economic slowdown and weaker demand. While in Singapore, real GDP growth will moderate to 2.2% in 2023 due to weaker trade sector. Services provided the largest contribution to growth, while high inflation remains a concern.